Joining us on ET now. Let's move on and let's skip a bit and talk about the new BSE physical settlement norm which the Bombay Stock Exchange is now planning to incorporate. For that we have, to discuss that rather, we have with us Mr. Manoj Muralidharan, AVP with IIFL. He joins us live now. Manoj, good morning and thank you for joining us. In simple terms for our retail viewers, physical settlement at Bombay Stock Exchange, what does that mean?
Now, ideally, as you asked, to put it in simple terms, a physical settlement on the derivative side, usually across the indices we have in India, that would simply mean the owner or the buyer of an option or a future gets the right to go ahead and ask for settlement, and wherein he gets the share which gets traded and he gets back in his trading account. Ideally, now what happens is the derivative side of the market right now is cash settled, and a buyer of an option or a future has more or less the power to go and sell it off or exchange it for the cash value he has it. Previously, even in NSE, I guess this December, till this last December, we had the option where he can actually go ahead and exercise it because it was an American type of option. Now, since even NSE has gone into the European style, and with the BSE coming up with a circular saying that they would want to go ahead and make this delivery-based settlement. So, this ideally says that a buyer of an option or a future, he gets the right to ask for the physical settlement of the shares, and he gets that in his account rather than just going in for cash settlement.
So which are the likely, liquid contracts where investors could actually use this tool and be able to best utilize it?
Well, if we're talking about, looking to be very precise, BSE, the derivative part, it doesn't have, hardly it has any volumes going on. Because if you see, even as of December, the contracts for the Sensex futures are hardly around 12 to 14 odd contracts. Now, I feel this would be a welcome move wherein they would want to trigger and accelerate the stock lending and borrowing mechanism rather. Now, precisely the stock lending and borrowing mechanism, it does not add to more than 0.03% of the cash volumes. Now, cumulative, if you look into the volumes that is happening in the market, the BSE and the NSE cash, it contributes around 12 to 13 odd percent. So even if we see this SLB mechanism going up by 1% odd in say 2 quarters, that would be a welcome move, because that will definitely increase the volumes happening in the indices.
Manoj, is this more like a desperate move from Bombay Stock Exchange in order to gain market share?
Well, I would not actually say that that would be a desperate move, because the reason is, if it was that, they would definitely want to go ahead and make the stock trading more liquid rather than getting into this part. Man, this would be the fine trade of a derivative trading actually, because if they have to go ahead and increase the volumes, obviously they would have to look into the concern why exactly there is no trading happening in the stocks, futures rather. But this would be a welcome move, because NSE would be looking into it, and the major criteria they have in is the operational activity, because this includes the custodian as well. And so once that is taken care of, and if NSE goes ahead and if it starts the delivery based settlement, obviously we can see a good spike in the indices volume. That should be around 8 to 10 odd percent in 2 quarters from the time we start this.
Okay, Manoj, thanks very much for taking time out and explaining the new delivery-based F&O at BSE. DLF is looking good, ONGC, Kotak Mahindra Bank, IDFC, FEFA Goa, lots of other individual stocks. Take a right quick break, be back with more.